This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, good evening, everyone. This is AJ Monty joining in for the monthly open house Q&A. It's my absolute most favorite time of the month as we gather each and every Monday after expiration day. For those that are joining for the first time, this is a regular event that we hold each and every month, and expiration Friday takes place for the monthly options on the third Friday of every month. Therefore, our open house takes place on the Monday that follows expiration Friday. So I would love to be able to say the third Monday of every month or the fourth Monday of every month, but it doesn't happen that way because obviously some months are shorter than the next, and the following Monday might be a whole new month. So with that said, I'd like to welcome again everyone to today's session, where I'll start off analyzing the general markets, and then I'm going to get right into the individual stock analysis. We already have one from George asking if we can analyze GLD. I'd like to ask everyone else to just hold off on the stock symbols until I get to that part. When you get my signal to go ahead and start typing, I will start reading and carry forward with as many stocks as I possibly can in the amount of time that we have left. I don't want anyone's stock symbol to get washed away in the scroll of the Q&A box down there. So hold off if you can. This is a one-year daily candle chart of the Spyders. And as I zoom in here, you'll see that I left my lines on from last week's market report, where I said the Spyders will most likely move up early in the week and then start to pull back later in the week to fill this gap. This horizontal line is my gap fill target on the downside. While we're on the Spyders, I want to point out a couple of things that you need to know. So it's going to be very educational. If you can't take notes, that's great. If not, we are recording this for all of our members to go back and refer to. Look at the number of green candles that we have down here. 1, 2, 3, 4, 5, 6. This is 7 green candles in a row. And it all started back here with this bullish engulfing pattern, where the week before last I forecasted that we would go higher, with the end of my target being the end of that line. We hit that on Friday, and we're almost at my target pivot point here on Monday already. And notice the volume. The drop in volume is about 15%, almost 20% drop in volume. And the CCI down here is starting to hinge or start to turn sideways from an upward direction. So we just might see a red candle tomorrow. I'm not going to put odds on that right now, but I would say that the odds are high that we'll start to see the pullback. I'm not expecting a major collapse in the market by any stretch. I am expecting a decent profit-taking move, and possibly, even if we break out below this support level, the gap fill support, we might even pull all the way back to that 20-period moving average before we bounce. As we enter into the month of December, understand that there's a very powerful cycle that we see almost every year, and that's the year-end rally, or what we call the Santa Claus rally. And as you progress beyond the year-end, we then get into another cycle, which is the January effect, which I'll probably cover towards the end of December, where money starts moving into the small cap stocks. So we definitely want to keep an eye on the signals here, on the charts. If you have any long positions, I'm going to repeat what I said in the weekly market report. I would strongly suggest that you place stops or put in some type of protective strategy to protect those profits as we continue to stretch for higher highs in record territory, and make sure you don't turn any winners into losers. So that's the Spyders. If we look at the Qs, which is more or less the NASDAQ stocks, I want to point your attention again down here to the CCI. You see today, Monday, we almost hit my target pivot point and almost filled the gap in the same day. Obviously, this is a very narrow range. I'm not expecting too much more on the downside, but I do expect that gap to fill. And if you are up on the gap trading strategies, you'll know that 80% of the time gaps fill. And then after they fill, there's an 80% chance that the prices will reverse or bounce from that point. If it's an upward gap, it'll pull down most likely and then bounce. Again, we have a long stretch of green candles. Very, very slight drop in volume, if any drop at all. But here's what I want to point your attention to. And I'm going to draw a line, but then I'm going to delete it because I use these lines in next week's report as a reference. Notice what's happening with the CCI. We're seeing lower highs on the CCI while the prices are reaching for higher highs. That is called a negative divergence. When the CCI is registering lower highs while the prices continue to plunge higher, then you got to really watch out, because that's one of the most significant signals that's given off by the CCI is the divergences. That divergence can also take place as a positive divergence when, if I can find an example here, my screen just froze up there. Okay, let's see. Here's one right here. Here's a low, and you can see down at the bottom, the CCI registers with a low. Not long after that, just a couple of weeks later, the Qs in June showed a lower low, but we have a higher low on the CCI. You see that? That is a positive divergence. Please try to commit this to memory, because when you're looking at your charts and you're getting ready to buy because you're, falling for the hype or whatever it may be, please check your indicators, check the volume, check the types of candles, check the rubber band effect from the moving averages, see if there's a wide price divergence from that moving average, and then make your decision based on the evidence that you're seeing on the charts, not so much your emotional opinion. All right, that's probably the best advice I can give anyone. And therefore, again, as we continue to stretch for record territory, be prepared for a correction or a pullback in a profit-taking move. And let's move on to, what can we look at now? The VIX. Let's look at the VIX. The VIX is not moving low. This is also very interesting. The VIX is inversely related to the S&P, right? So if you have the S&P that's going up and the VIX is also going up, that's also a divergence. Remember, the VIX is a leading indicator. I anticipated that the general markets would move slightly higher. And as a result, I thought the opposite for the VIX, that we would go slightly lower and possibly break out below the support level. But guess what? That support level is holding quite well. Now, as I zoom in a little bit more, you'll see that this, can anyone tell me what this is? I'm gonna throw it out to the audience. When you have a small body candle falling within the boundaries of the previous red candle, what is that called? Can anyone tell me? George is absolutely right. It's a bullish harami. And that, Dan, that is more or less a doji or a spinning top, but George is absolutely right. A harami, and Lloyd is right as well. Type that in as well, almost simultaneously to George. A bullish harami is as bullish as a bullish engulfing pattern. So keep your eye on that. We have already hit my upper end of the target for the VIX. I said that this horizontal line was my target, and I said we would most likely move up to the moving average, and that's already happened. So more or less as a continuation of or extension of my projection for the VIX. I think we are going to break out over that moving average, and that, again, is bearish for the general market. So I'm not going to draw a line on here. Just know that being on this call puts you at a slight advantage because it's a continuation of my weekly market report. But I will next Friday mention to the audience that we spoke about a possible breakout over this resistance or moving average level. All right, so again, keep an eye on the VIX. Now, if we look at the diamonds, which is the Dow Jones Industrial Average, same thing, pretty much the same thing. We are seeing a higher high here on lower volume. We might go a little bit higher tomorrow, but again, we have four green candles in a row, not so many as what we saw in the Spyders, but we are seeing a good stretch of green, which we call the stale green light. However, the wide divergence from this 20-period moving average tells me we're probably going to start to pull back in this very near future. So again, if you have any Dow stocks and you want to protect those, then I would put your stops just below the most recent lows. And then if you see any kind of a gap fill down here or a bounce off of the 20-period moving average, then you might consider getting back into any of the long positions that you are protecting at this level, right? So let's see. Bruce is saying gap fill. If you have a gap on a daily chart but not on the weekly, are the chances of the daily gap fill still 80%? Yes. Yes, that is true. And Bruce, the other way is if you see a gap on the weekly that's not yet filled, the weekly open gap carries much more weight than the daily open gap. Weekly charts, I would say, trump the daily charts hand over fist. And so if we were to switch this real quickly as Bruce brings that up, if we were quick to look at the weekly chart now, you see a different picture in the number of green candles. You see this? We have 1, 2, 3, 4, 5, 6. We are on our 7th green candle for the weekly chart. Therefore, we're long overdue for a red candle on the weekly chart. So going back to the daily chart, that falls right in line with what my forecast was, and that we will most likely pull back later in the week. If we do pull back and hit my target down here, then guess what? The weekly chart, the weekly candle will have turned red at that particular point. So thank you for that, Bruce. All right, let's look at, what did I forget? Oh, Russell 2000. Russell 2000, I thought we would go higher. I don't know if that's going to happen now. We got a little bit of a hammer pattern here, but look at the oscillators. They are both rolling over and doing it with authority. If the CCI crosses down below this zero line or the momentum line, then I would say all bets are off for this week in us setting another record high in the Russell 2000. I did mention the weekly market report. Russell 2000 does not always follow the general markets. It's a more broad-based index. Obviously, it tracks 2,000 stocks. The Dow tracks 30, and Russell, the S&P tracks 500, and we could go on and on. But it does not always follow in sync. So this could be an area of resistance that absolutely holds. We'll have to see how that plays out. But I'm not going to remove that line, obviously, because if I'm wrong on that count, I want the audience to know that I was wrong on that forecast. And I think I'm going to be right on all the other ones, but I might be wrong on this one. I'm okay with that. So I'll still put us in the high percentages of accuracy. All right. Now, finally, I do talk about OUSA. The only reason I am bringing this up each and every week, and this was my forecast, that we're up at the upper end of the channel line, we could see a little bit higher before pulling back, is because the holdings in this one are Apple. I don't have it committed to memory, but I know there's Apple, Verizon, Johnson & Johnson. I think Pfizer is in there. You got Home Depot. It's just a good cross-section of high dividend, high yield stocks. And I am not too concerned about the light volume on this one because it's a fairly new ETF. And I'm not making a recommendation at this particular point to trade it, but I do track it because it does give us a good cross-section of stocks that are a mix of what we might see in other markets. And again, I think it's a really good gauge, and I'm going to continue to track it. Our option traders do have a position where we put on a pairs trade that was still working, and so we'll keep our members abreast of that one as well. Now, a question comes from Efren, and then that's going to be my cue. After you see me type in GLD, start typing in your stock symbols, because it only took me 15 minutes to go over that market recap there. But Efren says the CCI is in overbought territory, but prices still going up. Yes. What I said before, if you see, like for instance, the CCI is registering overbought for OUSA, right? We see it's overbought. We see the prices went slightly higher today, and that is usually what we see. You know, just because an oscillator or an indicator is overbought doesn't mean it can't go more overbought. In fact, a lot of times it does. Look right here. The stochastics back on, what day is that? That's November 1st. It crossed up and went into overbought territory, and it stayed overbought as the OUSA price continued to go higher. It's not uncommon for us to see that. Let's see what it looks like on GLD as I help George out. GLD has hit a lower low recently, but if you look at what's going on, again, it's, GLD, SLB, a lot of the commodity stocks or precious metals ETFs, again, do not always follow the markets. From what I can see here, GLD is moving up slightly off of this gap fill point. Remember what I said, 80% of the time after gaps fill, they reverse. And that's exactly what happened. Back in this area, the gap filled, and lo and behold, what's happened? It's reversed, gone up. The stochastics has crossed with a buy signal. Back here, the CCI has crossed with a buy signal. But we're going to have to keep an eye on this volume. Because, George, if you own GLD, yeah, we would love to see it come up here and fill the gap around 142. Let me erase all these lines so we can do that for you. Let me erase this. Hold on. Bear with me as I clear the lines. There is a gap fill target up here around 142. Not quite sure it's going to do that right away. I think eventually it will. But in the meantime, with the drop in volume, what that's telling us is that we have 5 green candles in a row. The drop in volume is telling us that the buyers are starting to weaken. Now, on a parallel note, I will tell you from my personal account, I sold out of a long position in SLB that I bought back here on this gap fill area right here. I bought it lower. And you know what? I was not happy with the drop in volume here that we're seeing, a steady drop in volume in SLB. Now look, again, stochastics on Friday, crossed with the buy signal. The CCI, crossed with the buy signal back here. So if these are showing a buy signal, why is AJ selling out of his position? Well, mainly because of the drop in volume in the stale green light. If you notice down here, there's a very, very small open gap. So I took my profits. You can't lose money taking profits. If SLB goes back down, fills the gap, and starts turning up, guess what I'm going to do? I'm going to buy back into the position, and I might do it with force. Well, GLD is in a very similar type of position where there is still a very minor gap. Let me zoom in here so you can see this, because without really studying it, you might think, oh, there's no gap there. Well, look, the high on this day is what? 137.59. 137.59. So what that means is the following day has to have a low of at least 137.59 for it to be no gap. Well, what's the low? 137.64. So there is a 5-cent gap from this high to that low. So what does that mean for GLD? It very well could drop back down to fill that gap, and then it could start all over again in an upward trend. But I'm not counting on the fact that tomorrow is going to be another green day. I'd rather take my profits and reposition on another buy signal when I see it. And all of the other oscillators are in line with that idea. You see? So that's how we look at that, and hopefully that helps you out, George. Okay, Sean is looking at AZO. And folks, if you are giving me a stock symbol, please do your best to give me your idea on what you might be thinking about it. Like, for instance, Sean is saying AZO, short based on triple top. Maybe you meant bias on that, but anyway, you have not entered it yet? Good. Why? Because AZO AutoZone is showing what? Can anyone tell me what this is? And can anyone tell me what this is? Let's see. Who are the technicians out there? I'm waiting. There's a little bit of a delay there. This most recent candle from today is what type of a candle? George is right again, right on top of it, George. Thank you. That's a bullish engulfing pattern. Well, that's very bullish. Here's a bullish engulfing pattern. That's bullish. Here's a slight bullish harami. Again, bullish engulfing pattern. So you got all of these buy signals coming in, although we have a lighter volume day today, the average volume is not really dropping off that much. It's not bleeding off. So what's happened is the oscillators have turned right back around and have gone up. So I would say, if you're thinking about taking a short position in this one, Sean, I would absolutely wait on that, because the bullish engulfing pattern is forming right at a key resistance point, and it looks as though today it closed over that resistance. So if you see another green candle tomorrow on higher volume, I would basically sit on your hands and not hit the short sale button until you see a convincing signal that tells you to sell it. Now, with that said, let's look at a weekly chart on this. It might give us a different picture, and I would say it does. You got a long stretch of green candles, and you might see a red candle showing up, but I don't think it's going to be tomorrow. So be careful with that. Be really, really careful. I would say, you know what, Sean? I would wait until Friday or even the following Friday to see how the week is going to end, because if the week looks like it's going to end on a red candle, you might want to take that short position over the weekend and take a ride, into Monday and Tuesday of the following week. Yeah, that might help you out. All right, now Dan, I don't know what your attention is on this one, but Dan is asking me to look at BABA, which is Alibaba. Very volatile stock. Got a quite interesting range. Yeah, this one, again, I'm just going to rattle off the signals as I see them. Number one, we see a bearish engulfing pattern. See this? Oh, I stand corrected. That's not a bullish engulfing pattern. A bullish engulfing pattern, you would have had to have the bottom of this red candle down below the bottom of that body. So that's not the case. However, it is right at a resistance point or very close to it. You have the CCI is starting to hinge back down. The stochastics has already crossed with a sell signal last week, and you still have a fairly wide divergence from that 20-period moving average. So again, if you want to type in what your intention is there, Dan, okay, you're long. Oh, I just saw that. Okay, you're long it. I would protect that. I don't know where you're long it. If you're long it through the options or you're long it through the stock, it's a fairly expensive stock. I would say, with a candle like that, my gut instinct would be to at least sell half the long position and put a stop below Friday's low for the rest of the half and see what happens there, okay? And then be really, really careful of taking any new long positions. So that's Alibaba. Annie, NVDA, looking at NVIDIA. There we go. Bullish engulfing pattern. Now, I was looking at this one with another one of our students, and see this line right here. This is not a trend line. That is not a support line. That is called a speed line. And I was talking to Darren earlier today at around close to noon about this because he has a position in this. And I had told Darren to look at the angles of past upward legs. And this is how you do it. Look what I'm doing. I'm kind of starting. My eye is trying to envision a trading channel here, right? And all I'm trying to capture as many of the middle as I can, as much of the middle as I can. You see that? And then I'll go back and look at, let me take another step backwards so we can see. All right? Here, okay, from this low to this high is an upward leg, but let's try to capture as much of the meat as we can. Here, back here, from this low to this high, let's try to capture much of that upward range. Now, what do we see? What does this tell us? These are called speed lines. Speed lines more or less measure the angle at which the trend or leg is moving. The steepness gives us clues. If you have an extremely steep upward move in that leg, then there's a greater likelihood that that is going to drop. You follow? Now, if we zoom in a little bit more, see that this is a very convincing bullish engulfing pattern. I'm not seeing super high volume, but chances are tomorrow that volume will be high. The CCI is now starting to move back up. The stochastic is starting to move back up. I would be more bullish on this one than bearish. And with that said, I would trail my stop somewhere below the moving average or maybe even below the low here. I know that's a wide gap between your buy price and that moving average because it is a high price stock. But the way I would trade this is I would go out and buy the leaps on that one, try to go slightly in the money, a couple of strikes in the money, take a long position, and then once we get an exhaustion of that upward leg or any kind of a sell signal, I would then be selling front month options into that long position to pay down the cost basis, and then I would turn it into a calendar spread. If you're not an option trader, you have no idea what I just said. Therefore, you might have to take some classes on how to trade options, but the diagonal calendar spread is my most profitable strategy over the years, almost 40 years now. I traded diagonals. I love them. They're very flexible, and this is a great candidate for one of those. So, Annie, you and I talked about that earlier. Maybe that could be one of your diagonal calendar call spread candidates. Okay, Bruce is back with UNG, and Bruce is saying, I have 1,200 shares at 21.01. So you are up a grand total of 9 cents in the green on that one, Bruce, and you're looking for the best time to sell calls. All right, well, I'm not going to say today was the best time because what you have here is you have a stock that's basically stuck between two gaps. You see this? There's a gap to the downside, which is where we're closest to, and then there's a gap to the upside. So what you want, and then there's a minor gap that formed today. Now notice the volume here. This is not really that great for your long position, but it can't hurt to sell at the money calls right now. And here's why I say that. Let's say you own it at 2101. Oh, I read that wrong. You're slightly down on that. It's 2010, not 2110. All right, so you're slightly down on that one, not by much, but you have a stock that is showing some signs of downward pressure, right? So if you sold the 20.5 calls for, let's say, $1, you're lowering your cost basis to where now you're back into a profitable trade. You follow that? So if you sell tomorrow, let's say you sell the 20.5 calls for $1, and let's say it goes lower to fill that gap, what you can do is buy back the calls that you sold, leaving your long position intact. And what you've done is you've helped lower the cost basis by capturing that small profit on the call that you sold. Then, after that gap fills and you see a bounce, this is what you can expect to see. This gap will most likely start to fill. So when it gets back up to 21, you could put those calls out again. So basically what I'm telling you is you could hold the long position in place, but trade the calls from the short side. And if you do that, you're really in a win-win type of a position because, again, if it drops, you get to buy the calls back. If it goes higher, all right, you sell your position for a profit. Win-win. All right, so hopefully that helped you out. All right, Dennis, welcome. AMRN is Dennis, is the symbol, AMRN. And we're looking at AMRN Corp. It's an ADR. It's sponsored. I'd say sell it, and that's the end of the story. Okay, next stock, COLD. No. Dennis, right there, for me, that's a screaming sell. It's screaming, sell me, sell me, sell me. If you don't sell me, I'm going to smack you in the face. No, just kidding. This is a screaming sell because it failed to maintain levels over that former resistance right there. You have a bearish engulfing pattern. You have the gap below the market. You have a drop in volume on the way up. You have a wide divergence from that moving average. You have stochastics turning over almost at a sell signal. You have the CCI almost at a sell signal and going lower. And I'm really having a hard time finding any more reasons to sell it other than this gap filled last week, so we are waiting for a pullback from that gap fill point. So your position is you have the stock and the January 2020-25 call options. Here's what I would do. I would sell the position for a profit. Now, listen to my words carefully. I'm telling you what I would do. I'm not telling you what I think you should do because that's ultimately your decision. What I would do if I owned the stock and I had the 2025 calls, which are out of the money, I would unwind the position, take my profit, wait for the gap fill to fill down below at around 17, and if you get that gap fill take place, and let me get rid of the drawings here, all of them. I have to remove all the drawings to make a clean slate, right again. So remember what I said, 80% of the time, gaps fill. Now, if that gap fills, it's also going to be a roll reversal support level right here in that general area. So if you get that pullback like this, and it could happen pretty quickly, because if you look at the history of the stock, actually I'm going to do it this way. Can anyone tell me why I drew my pullback angle like that? Who wants to take a stab at that? We kind of went over that a little bit. Let me see. Who wants to type something in there? Speed lines. George, man, I'm going to have to hire you as a backup consultant here. George is absolutely right. I drew this angle based on what I saw previous angles. See? See these angles back here? The speed lines. Look, this one might be a little bit more steep, but look at how I drew this angle trying to keep in line with previous sell-offs. So this is a good way to figure out what your timing on this one could be as well. Now, obviously, if it goes up big, it could pull right back, but if it pulls back that quickly, you're going to start seeing gaps to the downside. You're going to see gapping down start to take place. If you look at the end of that would take place right around December 19th. So what you could do, get out of the position, click your right mouse button if you have Thinkorswim, set an alert for right around 1787. I'll raise that a little bit, 1787, and you say, computer, if the price is at or below that price, possible long. Boom. Create it, tuck it away, go to your next stock. I tell you, thank goodness for technology because Years ago, I would have to look at that thing every single day. That is now in my watch alert box. I'm watching it. When that alert goes off, I'm telling you, I will have an email sent to me, and at that time, the notes will come up, and it will tell me exactly what I need to do or what I should be thinking about doing. So, Dennis, hopefully that helps you out. Remember, you can't lose money taking profits. Don't ever forget that. Efren is looking for symbol COLD. Efren, if you can, again, tell me what your idea is for this. I'm going to have to speed it up. Holy mackerel. We're already 35 minutes into this presentation. It's unbelievable. All right. Now, Efren, I'm going to look at this. Let me scroll down, see if you typed in a follow-up on that. I don't see it. I don't see it. I don't see it unless I skipped over it. Okay, I don't see it. All right. So, COLD, Americold Realty Trust. What's happening? Let's slow this down just a little bit. Number one, we see that for a good length of time, this stock has been in an upward trend. I'm going to start from the very back here, and I'm going to try to connect to this low, extend out, try to capture some of those lows. Now, I'm going to explain something to you that might sound a little harsh, but it's something, again, as a lesson, I want everyone to pay very close attention to this. When you have a stock that is in a significant upward trend or upward trading channel, see this? This is a perfect textbook trading channel. What happens is when that trend line is broken, like we see here, you will generally see prices gapping down. Can anyone tell me why we might see gaps here and not just a trade down, but a gap down? It might be negative news, but other than the negative news, can anyone tell me why that might happen? George, ideas? I'm picking on George now. All right. Oh, damn. Don, George is right. George, you're absolutely right. Stops. See, what happens when people buy and it pulls back and they buy more and they scale up buying, they tend to stack their stops up under the trend line. So what happens is, especially George, you really set me back here for a bit. I almost got out of line there. But what happens is people trail their stops up. So if you bought it here on this bullish engulfing pattern and you put your stop below that trend line and it goes higher, what are you going to do? You're going to move your stop up with the trend. Some people move it below the 20-period moving average. Some people just trail below the trend line. Now, those nasty, evil, villain market makers out there, of which I was one of them at one time, they know exactly where those stops are. So if the stock is starting to close below that trend line, guess what they're going to try to do? They're going to try to run the stops. They will short the market. They will short it, and they will lean on it until all those stops are triggered, and then right in this area, they're going to buy back their shorts and cover. And then what happens? Boom. You got a short covering rally. That's what this is called. This is a combination of a short covering rally. It's a combination of a gap fill, return to gap target. It's a combination of dead cat bounce. It's a combination of the technical traders trading a wide divergence on buy signals from the CCI. It's a combination of all those things. But what am I getting at? Once the gap fills, 80% of the time it's going to reverse. Here's my forecast on this one. Bam. That's my forecast. I'm going to leave that up there. Maybe next month someone will bring that up to see whether or not I was right on that. But I'm telling you, Efron, if you are thinking about buying this one, beware, because when a trend line is broken, that role reversal concept kicks in, and especially when it's a long-term trend, that former resistance, that former support turns to resistance, and I call that the kiss of death. That kiss of death is when the trend line acts as resistance, the moving average acts as resistance, The gap fill acts as resistance, so you have a triple witching of resistance areas kicking in simultaneously. So there's a very high chance that price is going to start to drop. So be very, very careful. For those option trades out there, you might keep this one on the watch list, because if this does in fact roll over, this whole trend could start to roll over. And if you look at the weekly chart, you'll see that that is a significant upward trend that once reverses could turn on itself, and then you got overhead resistance being the stock's worst enemy at that particular point. So again, thank you for that. And we're going to go Jeff Summer. Jeff, I believe you're still in Florida. I hope you're enjoying the cooler weather. Yeah, people up north are laughing at us that we have sweaters on in the 50s, right? We're 57, 58 tonight, and we got sweaters on. Anyway, ACB is what Jeff is looking at. It's a pot stock. Jeff, just so you know, I'm having a really hard time finding bottoms and looking for opportunity here, because I just read an article that, you know, these medical marijuana industries and these legal marijuana companies have more or less overproduced, anticipating a big rush for that product, and now they flooded the market with product. So they're actually killing themselves. And secondly, I can't remember where it was, if it was on Market Watch or one of the major financial news outlets. They were talking about how a lot of these companies are running into legal issues as they continue to battle state laws. So your idea is, could you take a look and see where this could be bought? Well, again, I'm having a really hard time for that very reason. But if you're really are pressing me for what I think technically, I'm going to have to back up, because I hate buying stocks on 52-week lows. Why? Because as soon as you buy a stock on a 52-week low, the next day it sets another 52-week low, right? So the only thing I can tell you is go back here in 2017, and that's the only support level that I can see, right there. So if you get down to the $1.61 range, you're now dealing with a penny stock, which again could be almost suicidal, because here's what happens. People buy into these pot stocks in the dollar ranges, and they say, well, what can I lose? I'm going to throw my money at this and see what happens. Unbeknownst to them, that what they could really lose is 100% of what they're throwing into the stock. I know you long enough from when I was a consultant at Schwab. I'm telling you, find a better stock, okay, Jeff? Find a better one. I'm just being honest with you. There's plenty of stocks out there that I think are better priced and looking better technically. So that's it. I would say, again, if you're pressing me hard, I would say if you see any kind of a bullish pattern down around that level below 2, then good luck to you at that particular point. All right, Gordon, I talked about SLB. But what I like to do when I pull this up, I'm pulling it up, as you can see, I'm pulling it up into the weekly chart. If you look at SLB, you say you have a gap fill buy order in the 1543, 1470, and 1346. What is the chance SLV will fill all 3 gaps? Well, the answer to that is easy. There's a very high chance it'll fill all the gaps. But that doesn't help you. Here's why. The big question is when? When will that happen? Well, again, looking at what I did, first gap to be filled, right there. And I'm going to be looking to get back in at that particular point. It's only when the price starts moving down below that gap fill support level that I will expect this next gap in line to fill. At which time, if it fills, I'm going to be looking for another buy opportunity. Again, short term, not long term. Short term, gap fills, 80% chance reverse. It rallies, I sell it, I take my profit, wait for the next point. So what I would say is you could actually be a scale down buyer at 14, all the way down here to 1450. At which time, I'm telling you right now, this gap fill down here I am going to sell 80% of my positions and get super long silver at that level. I'm telling you, I'm personally going to do that. If the 1415 level, 1417 level, 1470 level, I am personally going to get long a boatload of silver at that level, because especially if it does it in the next few months. If it does it in the next few months, you're going to have to understand that the wide divergence from the 20 period moving average is going to stretch the rubber band, and that's going to give us even more of a chance to make money on the upside. So I like your ideas of buying in at those gap fill points, but like any other position, any kind of a bounce and followed by a negative signal is your chance to take a profit and then reposition at the lower levels. Hopefully that makes sense. Roberta, I haven't seen you in a while. Either that or I just missed your name last time. You want thoughts on Delta. You do not own it. Are you talking about Delta Airlines, DAL? I hope so, because this is Delta Air. Delta Airlines looks pretty good. And you don't own it, but here's why it looks pretty good and not super good. This right here could very well be the beginning stages of what we know as a cup and handle, right? Here's the cup, and the handle is starting to form right there. Now, obviously, Delta, their number one expense is going to be what? It's going to be fuel. So you want to also track, the gas prices, oil prices, diesel price. You want to track all the commodity markets for fuel. You might want to track OIH, the oil holders, and because when oil starts going up in price, Delta profits go down in direct proportion too. So if you look a little bit more closely, it looks like a bullish engulfing pattern after a gap fill today. So in the short term, I think we could see, let me get my angles right. I think we could see that. George, you know why I drew my angle that way, because I'm looking back here at speed line. So I drew something close and parallel to. So we have almost a hammer pattern, definitely a bullish engulfing, definitely a gap fill from last Thursday. You have the stochastic starting to hinge, not in oversold territory by any stretch, but it's starting to go up. And I imagine you will start to see the CCI start to move higher. So short term, I'm more of a buyer than a seller. However, with that said, I would put my stop somewhere right below the 20-period moving average. If you're going to trade options, go with the long-term options in the money. You'll be safer to do it that way than buying a weekly option out of the money. George saying thanks. No, George, thank you. Really, you're making this a lot of fun for me. Okay. Dan, you told me you were long Baba. I got to that. George, you answered. I'm just going right down the line here because I'm trying to make sure I didn't lose anybody. Okay. Ken Wolf, welcome. Ken is one of our regulars looking at PAA. Jim, I'm going to get to you because I was talking about Roku earlier today with Annie. All right. Look at PAA. MLP sector seems to be negative. Time to sell. Ooh, man, you should have asked me that 2 months ago. Is the time to sell? I don't know. You're long it, and I don't want to create more pain for you, Ken. But I'd be looking for the exit sign any day now, and here's why. Think about what I said about the general markets. I'm expecting a little bit of a pullback in the general market. Now, I am expecting year-end rally, but we have to keep our eye on the time frames that I'm talking about. Short term, I'm talking immediately short term, I'm expecting a pullback to be followed by a year-end rally right up until the end of the year. Now, the overall market has been trending higher, and this is steadily going lower. So I don't even know if I want to ask you what your cost basis is on this one, but I'd rather see you end the torture and pain and find something that's a little bit more healthy. In fact, what I would do is look for a stock similar in price, and in your mind, switch the stock symbol to PAA to the next happy stock, whatever that is, right? Or find a stock that's half the price and buy twice as many shares. in a positive trending stock or one that has a more positive outlook on stock symbols. Again, you got so many mixed signals. You had a buy signal on the CCI, and then today, boom, it's like going back negative again. So the volume is dropping on a slightly higher high. It's hard for me to find any reason to buy it, but I can tell you I would put my stop immediately below Thursday's low, almost hope to get stopped out, and then look for a next best candidate. Okay, I'm looking at the clock and looking at how many more stock symbols I have to go. I'm going right to Jim. Jim Pindell is looking at Roku. Roku was on the NASDAQ top 10 most actives. I'm looking at this as a short candidate right now. Just to be honest with you, I'm probably going to start buying puts on this one tomorrow morning. There's lots of reasons why, but let me read the rest of Jim's message here. He owns Roku at $1.27 plus, and I have 5% trailing stop. Is there a better stop level? Well, you know what you could do, because this is a hot stock. You know, Jim, I don't know if you know about what covered calls are, but if you want to look into that, again, I'm making you a suggestion on how to take money out of the market. If you're expecting a pullback, what you could do, if it's trading 160 and you think it could pull back $7.50, sell the December 152.5 calls. Look at what they're willing to pay you. $16.50, almost $16 a share to sell it a little bit lower, right? So you're getting yourself an opportunity to take in some cash while protecting your downside. See, then if the stock drops down and pulls back to the moving average and starts to bounce, you buy those calls back at a profit, you keep your Roku position intact, and then you're off to the races again. So you're in a very, very good position, but I would say most definitely protect those profits because, like I said, I am expecting a pullback for many reasons, and I'm going to give them to you one at a time very quickly. Today, the gap filled. 80% chance it's going to drop from there. Bam. Wide divergence from the 20-period moving average. Bam. That's bearish. You got 8 green candles in a row. Count them. 2, 4, 6, 7. Is it 7? 1, 2, 3, 4, 5, 6, 7 green candles in a row. 90% chance tomorrow it's going to be a red candle. Stochastic starting to roll over. Hinging. That's beginning to show negative momentum or less positive momentum. The CCI is showing, get this, remember I talked about this, this is the most significant signal that I'm going to pull off the page. Look up from that CCI high. Boom. The next high on the CCI was on a higher high, but the CCI was showing a lower high from the previous high, and now we're showing an even lower high on that CCI. That is an extremely negative, bearish, how many other ways can I paint it red, sign on the CCI. So I'm going to be buying in the money puts on this one, most likely on the opening tomorrow. I'm going to wait for a pullback, turn into a calendar spread, and I won't have enough time to get that out to the Oracle subscribers. So if you are an Oracle member and you want to pick that one up with me, go right ahead. I'm feeling good about it. All right, so now playing this out, all right, for Jim, if the stock pulls back to the 20-period moving average, that moving average was former resistance, which will now turn to support. So in this general area, you might see a little bit of a bounce, all right? Dave Willingham is one of our coaching students, ORLY. Let's go look at that one right now. And Dave is telling me he has a put. And it keeps going up. Well, unfortunately, when a stock goes up, you know this, Dave, prices of puts go down. Now, you're caught here in a tough spot, all right, because my forecast from whenever I did this was that we would go lower, and it did not. It did not go lower. We still have a gap below the market. We have a higher volume day today on a green candle. Now, normally that would be bullish, but you got a whole bunch of mixed signals because the shadow, which is that long vertical line above the candle, is longer than the no shadow below the candle. So it tells us that during the course of the day, I can even switch to the daily chart, the buyers tried to push it up, but the sellers pushed it back. See on the opening how the buyers tried to push it up? And right after the opening, right around 9:51, the sellers came in with force and then kept a lid on it. See how they kind of capped it during the intraday market. So chances are tomorrow the price will most likely drop. But be careful because I don't know which put you own. If you own a short-term put, the market could still move in your direction, but you could still lose money because if you have time decay on that near-term put, that could hurt you. So be careful about that one. I'd much rather be long a longer-term put on this than a short-term put and then look to possibly exit on the gap fill target down here, which will most likely be support around 400. All right, let's see. I lost my place here. There we go. Patrick Seaberger says SPY. I am bearish on this as volume has been lower than average and the tray, I don't know what you mean, was a constantly being popped up. Maybe this trade was constantly being popped up. All right. Well, listen, I talked about SPY in the very beginning. I'm expecting a pullback towards the end of the week and then right back into our year-end rally mode where I think the strategy would be more to buy on the dips rather than trying to short the rallies. All right, so be careful. We have a couple of folks on here that are playing it from the short side and they're getting squeezed. Eric, welcome. Haven't talked to you in a long time. You have a long position in LMT. That's Lockheed Martin. I was talking about this one as well this week. LMT. Oh, come on. Let me get that in there for you. Lockheed Martin is showing an extreme sell signal today. All right. So you have a covered call at 200. So that most if you're let me see, your long stock with covered call at the 200 strike? I don't know. Is that right? Correct me. Oh, I'm sorry. I'm looking at Dan. Dan, I'm so sorry. I hopped from Eric to Dan, and thought that was Eric putting that in. All right, so AJ, I have a long position in LMT and wondering if I should take a profit. Answer is yes. At resistance, boom. You have a bearish Harami, which is a small red candle / spinning top that falls within the body of the green candle. You have a long stretch of green, stale green light, which first red light showing up today on lower volume. The lower volume tells us the buyers are weakening. This is what I would expect to see in Lockheed Martin. You can see a pull all the way back to 380, which would be a 12, almost 13-point pullback. So I would take those profits, but I wouldn't throw this one off your watch list because there's a good chance that this will most likely bounce on that support level. Lockheed Martin is a defense stock that a lot of people like. Option traders love it because it's got enough volatility to trade it and enough premium to capture, volatility with. But you have to really be careful because it is extremely, extremely volatile. I am going to end it there because I have about 1.5 minutes to give you my final comment. First, I want to thank everyone, especially the new folks, for joining us on this monthly Q&A session. I am next month going to be joining Pete Najarian from CNBC. That's John Najarian's brother. You might know the brothers from Fast Money on CNBC. I'm joining Pete and Bill Johnson for a technical analysis boot camp on December 12th and 13th. I think it might be sold out by now. It's a very small and focused class. But if you are interested or at least want to be put on a waiting list for the next boot camp, I would contact the folks from Market Rebellion, marketrebellion.com. Register with them. Let them know you're interested in the technical analysis boot camp. and it's a 2-day boot camp that's going to be action-packed. I will be doing live trading. I'm going to be trading my own account with the group at that event. I'll be making money for sure. Some people who have been talking to me have already made their money back from the boot camp, or what they paid for the boot camp already in my coaching. And it's just a great, great market. So I'm looking forward to those folks that are attending the boot camp. And again, if you're interested, go to marketrebellion.com. That's it from me. Didn't run out of content. Didn't run out of stock symbols. Almost ran out of breath. Thank you, George, for your insight and answers so quickly. And I hope you all stay in touch. Please stay in touch with me. I love this. We're building a community of traders, and we're doing it the smart way. We're focusing on the charts and not on our gut feeling or emotion. So have a good evening, folks. We'll talk to you soon. So long.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.